Happy Thirsty Thursday, everyone. Hopefully, you all are having a great day and also geared up for a brand new adventure in the stock market, baby. Welcome. If you are new, I cover pretty much a wide range of content on this YouTube channel, ranging from government data, which is on the screen here, which I'm going to be getting to momentarily. Primarily big tech related stocks, fintechs, SoFi, baby. Today is going to be a partial SoFi video, but primarily talking about some government data as well, too. Today's episode is actually going to be relatively short, so if this is your first video and you enjoy it, definitely drop a like. Please do so. It's entirely free. And if you want to see more content from me, I tend to put out videos on this YouTube channel Monday through Friday. This channel is still relatively new, so let's get it to grow organically. A lot of people still don't want to be dabbling into the stock market, and it's a very bad mistake because when their sentiment is going to change on the stock market, the rally of everything is already going to be well in suit of happening. That's just how it is. The market's going to be way up here. Yeah, everything's going good in the market, but yet the vast majority of people don't want to take advantage when all this scary stuff is down here. And right now, if you look at this inflation report, you're probably saying, wow, it's pretty friggin' scary, right? PPI. Obviously, CPI yesterday, Consumer Price Index, came in line with expectations. Today, very much hotter, very much. Obviously, energy PPI a little lower than expected. Personal consumption, obviously, a little lower. But I mean, overall, a very hot PPI report compared to analysts. However, what is happening in the market, we're basically pretty much seeing that the major indexes are fairly green. Stocks that are very influenced by pretty much inflation reports. SoFi is holding green. AMD, the semis are definitely green. Software is taking a beating. Adobe is down 5%. ServiceNow is trending down. Palantir is getting hit a little bit. Meta is bleeding like crazy. Utterly. Even Microsoft is down. Microsoft being down 2.2%. That's very big. Oh, excuse me. Have some morning burpees, by the way. It's 11:24 a.m. Eastern Standard Time. Oil. Okay, so oil is $90. I talked about this in yesterday's video, which is honestly really lengthy. But if we go ahead and look at oil, actually, let me go ahead and zoom out even further. Let's go ahead and look at the weekly time frame oil here. Man, what's happening? Here we go. Okay. Go ahead and look out on the weekly time frame. So, the inflation report that we just got, the PPI, I'll go ahead and leave a link down below in the description if you want to actually go onto the website yourself. I tend to post videos pretty much a little bit after the market's been open, so it's all the hibbity-jibbities are pretty much out of the first 45 minutes of trading. But if you want to see like the reports in real time that typically come out at 8:30 Eastern Standard Time, 1 hour before the market officially opens, you can basically check out the link down below. It gets updated every single week. So if we go ahead and look at look at oil in the last month, you got to remember that these inflation reports are the month prior. So we go back to May. Well, look at May. Look at mid-May. Obviously, going all the way back to mid-May, you basically see these candlesticks, which represent essentially 1 week. So obviously, oil was significantly higher than it is right now. In my opinion, that's honestly why we're kind of green, is because the market is looking in the future and being like, okay, this report was blazing hot, but oil is down lower than where it was last month. So next month, we should see inflation start trending down. Now, hypothetically, if oil was going higher this month for June, that would caused the market to very much be spazzing out because the market's always looking into the future. Therefore, they're saying, well, the inflation report for June, that's coming out in July for June, it's going to be even hotter. As long as we continue ticking down, the market's going to let up on the inflation fear. Next week, literally in 6 days, we have the new Fed governor coming out. I believe the Fed governor is going to come out. He's going to squash rate hike fears. He's going to come out and say, hey, we're not going to be cutting rates. Yes, the previous month, the data was terrible, but hey, we're very close. Maybe we get a peace deal in Iran before the Fed meeting next week, which will be huge, with a capital H-U-G-E, baby. So that's one possibility too. Do I believe a peace deal is going to be coming? Since everything is politically driven, I do believe it is. Because I believe that Donald Trump wants to have a peace deal signed so the new Fed governor can go into the meeting and be like, hey, we just got a peace deal. The Strait of Hormuz is going to be fully operational, fully open. Oil's going to be flowing. Oil's going down. Inflation's being squashed. Rate hikes are off the table. We must monitor inflation to see when we can get back to cutting rates. That's going to be extremely dovish, okay? If you are new to the market, if you hear the word bullish, that means that people think the stock market's going to go up higher. Bearish is bad. You think the stock market's going to go down. When it comes to the Federal Reserve, there's two words. There's dovish, like a dove in the sky, being very white, very awesome looking. You know, it's a dove. It's beautiful, right? You're very dovish. Everything is bliss. Everything is good to go. And then you have hawks, being hawkish. Being hawkish is the same thing as being bearish. The Fed, when it comes to terminology, it's very different, okay? Don't ask me why it's actually, there is a reason why we call the bulls and the bears. I got to be making a separate video, and there is a reason why we call the dove and the hawks. I got to make that in a separate video, but you can literally type in onto Google. I don't remember the reason off the top of my head, but for the sake of this video, yes, dovish is good for us. Hawkish is bad for us, okay? Bad for the markets being hawkish. I was in the market during all throughout 2022, 2023. The Fed, oh man, it was hawkish. The market just sold off like crazy, right? So I remember that time period, but we want the new Fed governor to come in and basically give us a lot of, to be very dovish. Hey, no rate hikes. That's nonsense. What are you people thinking? However, we cannot get back to cutting rates until inflation comes down. Obviously, hopefully, fingers crossed, knock on some wood, we get a peace deal going and inflation can come back down. Maybe we get a rate cut by the end of this year. Who knows? Crazier things have happened. If you were watching my videos all the way back in December of last year, so you're talking about 7-8 months ago, I showed the prediction for a rate cut in December, and it was like, I think it was like 10-15%. Powell gave us a rate cut. So you can have a rate cut when the odds are against you on the betting markets, okay? Just because you see a very low percent on the odds that's driven by algos, the Fed can turn around in a blink of an eye. So we really just, I mean, me personally, along with, I'm assuming people that watch these videos are very much retail just like me, we can't be doing shit. Because our money and our verbiage, it doesn't sway the market. But there is one thing we can do, and that is we can buy the dip. We can stay in the market, especially during the really, really scary times. Right now, it could be deemed as a very scary time. And a lot of people that I know, a lot of people on my personal Facebook, I'm talking about like people I know like off the internet, they don't want anything to do with the stock market. They don't want anything to do with politics. They don't want anything to do with anything. I understand about the politics side. My disliking for politicians are through the roof. I get it. I'm in that boat. But I will never, ever, ever be in the boat of not investing during scary times. So on a conclusion to today's shorter episode here, I'm in the midst of doing several different things, so I'm doing a shorter video today. We really got to see what happens next week. We really got to hope that there is going to be a good peace deal coming in the Middle East. All this fighting is going to be over with, and good stuff happens. But as soon as all this stuff happens, this market is going to go on a tear. And you got to ask yourself, are you positioned? Are you ready? Or are you potentially thinking about getting in? My philosophy is you got to stay mirrored to the market. You got to stay in the market. Being in the market during scary times, it's better to be in the market than not to be in the market. Playing the game of getting out, getting back in. I've been in the market for the solid 6.5 straight years-ish since I've started buying stocks of, actually 6 years and some change. March of 2020. Rona. Very, very scary time. All right, catch you all later tomorrow for a brand new video. Tomorrow's video is definitely going to be longer, dedicated just to SoFi probably. I did want to talk about SoFi a little bit in today's video, but would rather do it tomorrow. Catch you all later. Hopefully you enjoyed today's little update for government data, and later.